Here we go. This is Eric Hale. Hey, everybody. Welcome to another episode of the Everyday Trader. I'm Eric Hale with Trader Oasis, and I'm joined with what shirt is that you're wearing there? Greg
Uh,
Jensen.
I am here representing the Los Angeles Dodgers, and we no longer have any money. Um, we're
Well,
asking
some
for
people aren't baseball
donations.
fans. Tell them what happened.
For those of you who aren't baseball fans, for those of you who didn't see the big news this week, the Dodgers signed Angels designated hitter and pitcher Shohei Ohtani to a record 10-year, $700 million contract.
Let's jump to inflation.
Unbelievable.
Let's start talking about
Yeah.
inflation.
We just exported all of our inflation to Japan, to Shohei Ohtani.
That is $700 million, a lot of money to uh, pay somebody to be a designated hitter.
Yeah, he's actually pretty amazing. Obviously, for those of you who are fans, know that he's not just an all-star caliber batter, but he's also an all-star caliber pitcher. And so because he plays both ways, you're kind of getting two all-stars in one player. And I don't know, is it still worth 700 million? That's a lot of money.
Yeah.
But we'll see.
All
Another
right.
reason to love baseball.
But in the context of the discussion, speaking about inflation, this was a big week in the markets and economic news. Um, yeah, so we've been together since I've been to the Chicago Fed, right? We did an episode after that. I mentioned that. Okay.
Yeah.
And then so I was at the Philly Fed this week. Really interesting discussions. I was there for a global interdependence center conference, and then also recognizing our friend Michael Drury, who was very kind and appreciated. I did pass along your kind wishes. Um, he received the Global Citizens Award for the Global Independence Center. So, but the topic, the conference topic was interesting. Demographics was the main theme, which is interesting, and there's lots of interesting stuff to talk about there in terms of where things are heading. That was also one of the topics at the Chicago Federal Reserve's economic outlook as well, was demographics. And we've got, this it's the most widely understood piece of data that exists, is the age of our population in the United States, that we've got this big bubble of baby boomers coming through, and everybody knows there's not enough workers, and we've got a birth rate that's declining. I'll tell you what, though, it's pretty depressing if you think about it, but I came away actually very positive and encouraged, because there's one thing, Warren Buffett has always said, 260 years has been a bad bet against the United States. I think that's still the case. We've got a serious demographic problem, but I think there's all kinds of exciting solutions that are going to come out and probably present interesting opportunities to invest, or that we'll address. And I mean, seriously, robotics and AI was one of the topics that came up again. I think that's interesting. But back to inflation. We started with CPI. Report came out this week. Am I sharing the screen? No, I'm sharing the screen.
Nope. There you are. Yeah, yeah.
So CPI came out, and the headlines after the CPI, and if you look at the core number, it looks like we're leveling off. I did my usual deep dive into the data that they provide, looking at the components of inflation. And so this is sorted by what's most important. So there's several hundred items that are in the CPI index, and I have them grouped by level 4 in here, but there's all kinds of different levels. Anyways, at level 4, and sorting by importance, at the top, rent of shelter, which is basically the cost of it's not just rent, it's what it costs you to live, medical care services, transportation, education, and communication. Why is that so important? That's because your cell phone and your cable bills in there. New vehicles was down a little bit, but the big news, the thing that gets your attention here, is gasoline coming down. I still contest that if you look at the top portion here. I think everything kind of skews a little bit to the right. And if you took gasoline out, we would have seen a pretty big number. And I know that the core number takes out fuel and food, but still, I think that CPI would have been up significantly. And I think a lot of people saw that. And one of the headlines from one of the newsletters that I got is, "There's no way we're cutting rates anytime soon." And I think that was the sentiment that came through from the CPI. Before we jump to PPI, did you have any comments on that?
My conspiracy theorist in me always looks at gasoline prices and knowing how that is so seasonal and easily manipulated, not just from government powers. And we have the ability to turn on and off spigots and control prices that way. But I think more importantly, from OPEC, which is a really unreliable, historically, they really don't care. And yeah, I agree. That's the main driver of why inflation has cooled, is the drop in gasoline prices this year. And knowing that it could easily flip the switch and go back to the upside in the coming calendar year has me really questioning the fact that the market all of the sudden is off to the races, that the Fed's cutting rates. I want to see deflation happen in food and in rent of shelter, and even wages for that matter, before I really jump and say, yes, we've conquered inflation. Do I think we've slowed inflation? Yes, absolutely. What the Fed has done with raising rates in 2021 and 2022 definitely slowed inflation. Have they slowed it too much? I don't know yet. I mean, the economy is still kicking right now, for the most part.
Yeah, and that's, it's getting to,
Costco just announced earnings today after the bell, and they were great. Costco's making a lot of money right now.
I've only been there twice this week, so
And it's not
Costco.
even Friday night date night yet. You
Well,
haven't even,
yeah,
you're going
loser
again
night
tomorrow,
is, yeah,
right?
get it right. It's loser night. We call it loser night. We go to Friday nights, the losers. That's us, because there's nobody there. We can shop. I'm actually going to pull up a chart at Costco here and see it, the extended hours if we could. Let's see. Is this 1 minute?
That's
Settings.
up a little. Oh, wait a minute.
Yeah, it's up. It's up a little bit.
It's up almost 2%
Oh,
in
wait,
after.
that's Costco. Hmm. That's an intraday chart. Yeah. So yeah, so the economy seems to be pretty strong. So the next big piece of data that came out. So I think when you looked at CPI, I think you said, "Oh, the Fed might actually raise rates." And then we've got the PPI number, which came in significantly lower. Just to put that into context, the expected ranges, but for the PPI, well, this is really what got everybody's attention here. Is that X energy year over year, month over month, there's a consensus range, and we were well below the consensus range. We were outside of the consensus range to the low side. So the producer price index took a pretty significant drop, so significant that the Federal Reserve voters, some of them revised their vote, or their summary of economic projections. So that's the big news for the week, was the what's known as the SEP. The Federal Reserve had its policy announcement on Wednesday, and what's striking to me is, as you know, we had this conversation with Fed presidents before, and voting members, and asked, how does this policy work when how do you determine what your recommendations are going to be? Well, the committee, we spend time working on it, we all get together, and right before I head to the Eccles building, we have a big meeting and say, okay, this is what I'm going to recommend. And so on Wednesday morning, we got a PPI. Did you catch Powell say that some of the members of the committee actually revised their SEP forecast down based on PPI?
Yeah. Yeah. No, that's again, the conversations like you mentioned that you and I have had with voting Fed members, that's that doesn't happen. They're not
Yeah,
that.
exactly. Well, it was I think it was said to me by a former Fed president from Atlanta that they'll lower rates if there's a like a two standard deviation difference from what they'll revise their recommendation. So I didn't think it was that big of a change. I mean, it was outside the band and lower, but really we saw a completely different um a different Fed president than we've seen before, right? I mean, it was a different person. Here's the statement, which is really minor tweaks from saying that suggests that growth of economic activity has slowed instead of expanded, and that inflation has eased over the past year. And then also down here, in determining the extent of additional policy. So they've added this word any, which was, I think, two or three, at least two people asked the question, this any, what does this mean? And and that in conjunction with what's known as the SEP, which is the Summary of Economic Projections, what you take away is a different story here about what the Fed is planning on doing. So this is a chart of the September SEP, and this is so they do this every 3 months, and these are so every one of these is a voting member's dot on where they think this is where the Fed funds rate is going to be next year in 2024. So this was from September, and here we are. I'm going to fade into this orangish color is what was released yesterday, and I'm going to go back so you can kind of see that there's a definite shift to the downside. And to put this into perspective, this is looking at this is just looking at 2024. So every month 2024 numbers went higher, and what we saw this just to put things into perspective is that we saw a significant drop down, and you saw it absolutely without any question immediately in the market. So I was watching the market live intraday. As soon as this press release, as soon as this came out, the Summary of Economic Projections, so technically this came out, the market shot up. Powell hadn't even spoken yet. And I was telling you that I had dinner with Mike McKee from Bloomberg on Sunday. And I love that guy. It's pretty cool. But I asked him, what do you think about Fed? Do you think we're going to cut rates? He's like, I don't think we're going to cut rates. We're not going to announce rate cuts. I said, what about 2024? He said, I'm not sure. He said, but what he did say is it's all about the SEP. And that's what this is, the Summary of Economic Projections. And you can go find it. There's other forecasts for other things too, like GDP and other economic indicators, unemployment, whatever. And so there's a slightly less optimistic outlook for next year. And that's what we see here. And this is the targeted Fed fund rate. And we've been raising consistently. So now Powell was very clear in the press conference not to say that we are recommending a rate cut, but this is a 75 basis point. This is pricing in a 75 basis point cut by the end of 2020. To be clear, what this is these are the estimates from the voting members. It's not a recommendation yet from the committee, because people are really asking, like, when are you going to cut? And like, well, this is not a recommendation. People are forecasting that we will have cut. So that's the and we if you anybody's been paying attention to the stock market over the past 2 days, you know exactly what's gone on and why. It's all been because of this.
Yeah, which makes me lead. Again, for me, I think the market is very wishful in its thinking. It wants it. It's used to it, that it's had it for the last 15 years, that when it wants to get rate cuts, it gets rate cuts, and it gets to go on its bullish way. Maybe this is a pivot again, another Powell pivot, but I don't know. I have a hard time thinking that the data justifies any type of rate cuts, even through most of next year. But maybe I'm wrong.
I got to tell
I've been
you,
wrong. I've been
I,
wrong.
I am very surprised as well. That, well, I'm very surprised at the change in tone from Chair Powell, because it seems like he's been, I mean, rebuking the market for looking. I mean, he's been very firm and almost like trying feel. I mean, the vibe for me is like trying to punish us or the market for looking for rate cuts. And there's a notable change. And I told you my theory, and that is that Powell will not be the chairman. I don't know. After the next president, there will be a new chairman. My prediction. I think he's done a great job. I actually sincerely do. I think we're going to have a soft landing, or it's looking like a soft landing. If you look at where the economy is, I don't. If you looked at everything that happened in the past year, I think I don't think anybody would have been predicting that we would have, if you knew that, global geopolitical crisis, banking crisis, all this other stuff. And we just hit all-time highs, in the Dow. S&P 500 is almost, if it's not there already, very close to all-time highs. He's done a really good job. And anyways, he's retiring. So here's my sort of, I don't know if this is totally true. He's retiring and he wants to see that blind trust go up in value. So he's trying to gig his retirement before he retires. I'm not saying he would do that, but
No, you would never do that. A Fed member would make a decision based on information that, anyway.
we actually did lose 3 Fed members in the past year because of that.
Yeah, we did.
That 3 Fed members are gone because they were what, you can't trade around a policy meeting? Are you nuts? Yeah. So look at
Yeah.
that is just phenomenal. So it looks like we're off to the races. I think we're going to finish the year higher. I'm bullish. I got to tell you that I actually did have some bearish trades on. I put some positions in collar trades, and I quickly unwound them. I don't usually day trade that quick, but I took off my bearish trade. It started losing money. I'm like, nope, we're just going to close it for a loss. Not even going to try and adjust it. And I had collar trades on Apple and some other stuff, and I just got rid of all of those and just let it run, which worked out to be pretty good.
Yeah, I made a couple of adjustments today as well to a couple bearish trades I had. I had a bearish trade on Shopify that, yeah, the announcement in the last couple of days has made that thing blow up to the upside, and it's been good that I made the adjustment. I'm actually on a nice Costanza trade on it that's worked out well.
The Costanza trade. I love that trade, which is doing the opposite of what you think. So some of you don't know what that is, but uh yeah, so do a bearish trade when you're bullish, because it's very easy to adjust into a very bullish trade.
Yeah, which is where I'm at right now. And now I just needed to just keep running, which it looks like it's going to. I mean, I really like the things that Shopify has done, to be honest. The last 6 months, the last couple of years, to be honest, they've done a really good job of capturing the digital market space and really, I think, competing with Amazon. Not a lot of people have been able to compete with Amazon in the digital space. And I think Shopify is doing a pretty good job of reaching out to really small business owners. So anyway, I'm not here to sell a position on Shopify. Other than I guess I do have a bullish position, so I should disclaim that I do have it, but I do still like the stock.
I gotta tell you something. In that same vein, so I was thinking of like Shopify and that sort of space, and the online sales or retail direct to consumer sort of space, kind of like eBay. The Latin American version of that, right, is Mercado Libre, which has been on a tear since November. I mean, it's gone from 1,100 up to 16. It's actually been pretty rough here lately. Have you seen any of the stuff going on in Argentina?
Yeah.
It's Milei. Milei is the new president.
Yeah, the libertarian guy that they.
Libertarian. I love that.
Yeah, I know.
It's an interesting experiment to see what's going on. I don't really want to dive too deep in that, but he's making some major changes. Big change, like 10 changes just announced this week. He backed off on getting rid of the central bank, but Um, he's basically cut the exchange rate by 50%. Be interesting to see how that all plays out. So there's some people who have investments in Argentina are kind of freaking out right now.
Hey, wasn't Powell at Goldman Sachs?
I don't think so. Was he? He
What
was
was
one of
he?
the big investment banks. It might have been. Why?
Have you seen what Goldman's done in the last 2 days since the Fed announcement?
Has it been phenomenal?
It's up 30 points. It's up
Oh,
10%,
geez. Look at
10%,
that.
10% in 2 days.
Yikes. Wow.
You made me start thinking. I'm like, I wonder if he really is like juicing something right now.
When I looked at him, he looks really old. I mean, his shirts are a little bit like the collars are too loose, and he looks really. I know he's an avid Peloton rider. He rides his bike a lot. He broke his ankle one time during COVID getting off his bike. But I know he works out a lot. But he's not looking so good.
He was at the Carlisle group. That's where he was.
Carlisle Group, yeah.
He was at Carlisle.
That's Rosenberg, I think.
Yeah. Yep.
Yeah, so yeah, he's worth like I mean, I thought his net worth was like 15 million before he came in, or probably more than that. But yeah, I don't
Yeah.
think Powell was doing it for the money.
No.
Anyways, what else is going on? What's coming up? Anything? The big news is already behind us. I think we've got, you know, it's we're
I
tearing
think
into the
that
end of the
I think the next thing coming up is Santa Claus. That's the move. I agree with you. I think I'm pretty bullish into the end of the year as well. I think now that the Fed is behind us, I think investors I'm gonna say that you might find more opportunity in small caps than you might in the big mega caps who have already had big moves. I don't know how much higher Nvidia really can go. I don't know if this is really going to push Nvidia that much higher, but I think a lot of companies that had not participated. I think the Russell 2000, if I'm not mistaken, hit a 52-week high today. They were up like almost 3% today, back above 2000. I think there's a lot of names in the Russell 2000 that maybe haven't participated in the big move in the last couple of years, like the Big Seven. That might be where you can find some opportunity. It's probably one of the reasons why Goldman Sachs had such a big move. Not that it's a small cap by any means, but maybe some concern about some of the financials is now alleviated. I have no idea why
I don't know
Goldman.
if you saw this too. Berkshire Hathaway bought a whole bunch more Oxy. I saw the 13F this morning. So
Yeah.
yeah, I think he's got like 28 or 28.9% of Oxy now. So yeah, all the oil, the energy sector is doing poorly with the price of oil crashing down. That's pretty amazing. So, but I don't know. I'm pretty bullish through the end of the year. I'm afraid that January 1, though, things are going to reset. I think people who have had profits, especially in the big seven, the magnificent seven, if you got profits, you're probably not going to sell in December. So if you want to book profits, let's wait until after the first of the year. And I think that mindset. So I'm watching for a pullback. I'm very bullish on next year, but I think January is going to provide opportunity for us because you're going to get some people and get that sector rotation. And I do think, as you said, small caps. I think people should look at like the Russell 2000 or the IWM as an ETF that matches the IWM the Russell 2000 small cap index. As I mentioned, I mentioned to you before we started, Holly Wade from the National Federation of NFIB, National Federation of Independent
Independent.
Businesses,
Yeah.
NFIB. Yeah, she was there, and I asked her how how things were going, and actually the survey was released on Monday, and she said that that small businesses are pretty grumpy, and inflation and labor are the biggest problems. I asked her, I said, are you seeing any, you've heard Sam Rines talk about price over volume. Are you seeing any of that? So, are they able to pass along higher prices and smaller volumes? And she's like, that's very interesting because we don't ask about that in our survey. They ask a bunch of questions. So I saw her scratching her head a little bit, and maybe they'll change their questions a little bit to see if there's any of that going on. but she says that, they're complaining because their suppliers' prices are going up, and they're saying they can't pass along higher prices, and wages are going up. And that was the NFIB came out this week, and that was loud and clear. And so small businesses, you talk about the Russell 2000, it's some of those companies are in the NFIB members, part of that survey. I don't know. That's about it.
Yeah. Tell me how, I'm still baffled that the market thinks we're going to cut rates.
I do too.
The Fed GDP now, the Atlanta Fed just raised their forecast again to 2.6% instead of 1 point. What was it? Let me see. Up to 2.6, up from 1.2. The economy's doing great. Why in the world? Why? I don't know.
Why are we going to cut rates?
Why are we going to cut rates? Why?
Why are we going to cut rates when the economy's doing well? Yeah. Well, I think Powell's words were they didn't want to. They're afraid of staying too high for too long, and I don't know. We'll get a read on it as we get more data. I think the good thing is it's good for traders if you're bullish.
Yeah. Yeah. No, don't get me wrong. Right now, it's good to be a bull making some money. So we're bulls until we're not. We'll let you know.
For sure. Well, thanks, Greg. Appreciate you making time, and I appreciate all of you taking time out of your day to listen to us. Really appreciate your feedback and your comments and your likes and subscribes. So feel free to share us with some friends, and let us know what we can do. Happy to address your concerns.
Thanks, everybody. Yep.